It's time to ditch the excuses. Get up, get out, and shut the f*** up. This is the Adjusting to Six Figures podcast.
All right, so this podcast, we actually already started it, but we had some technical issues, so we're kind of kicking this thing off again. Classic Kev in the house. Kevin is stopping all good buddy of mine that I've known for upwards of 10 years now. Met him as an independent when I first early on in my independent adjusting career. And me and Kev kind of kicked it off because Kev is also an entrepreneur, diehard entrepreneur, like myself. I guess, Kev, you want to do like a little intro for everybody?
Yeah. I'm Classic Kev. Yeah, me and Jeremy, we met in New York. I'm an adjuster. I have my license, but I'm actually what people would consider like the part-time adjusters. And the real adjusters, they don't like the Kevins, because we do other stuff, and like we look at this job as more of a way to make money. And, I love helping people, man. If I can legally get people money from insurance companies, I love that. But I own a bunch of real estate. I have a YouTube channel, and we talk about investing, cryptos, and just anything that can make you money, And, I'm going to do a couple episodes on adjusting because it is, for the average Joe, probably one of the best ways to make a six-figure income like fast,
Yeah. I mentioned independent adjusting is not something that you want to do as a kid. It's not something that you strive towards. You want to be a fireman, you want to be a police officer, you want to be a pilot. You don't want to be an independent adjuster. That sounds boring as shit. You don't want to be a claims adjuster. Who cares about that? But as you get older, you realize that some of those things that you aspired to be when you were younger don't pay that well. And if you find yourself in a situation where you've got a wife, you got a husband, you've got a family, you've got kids, you got child support, arrears, you got alimony, you need to make money. And what's great about independent adjusting is you can really make some good money with really limited education. I mean, you don't have any education really. Did you go to college or anything like that?
Yeah. So I went to a small college, and like people might get mad at this, but Southeastern Louisiana University. I got 2 degrees, one in beer pong and one in flip cup. It's like I got a business degree, but college to me, what I'm doing now, my mom ain't gonna want to hear this, but like I didn't need college to do anything I'm doing now.
Right. Yeah. They don't really teach this sort of stuff in college. The adjusting.
No,
they don't teach this in college.
And they should. You know what I'm saying? Because there's so many, people that are computer literate, that are good people persons that, and like, one of the companies, I'm not going to say name of the company, one of the companies we work for, they were 10 minutes like from Southeastern, the college I went to. And it's like, y'all, here's your, adjusting's one of the oldest, like the average age of an adjuster is probably like 50, 45, 50. And it's like, here is a young group of college educated kids you could have your pickings from. They just don't know about the field.
Right. So, yeah, I mean, it's the field itself. You do really, really well. I mean, you could do incredibly well with compared to college, compared to a job. You go to college, you're going to spend 4+ years at a college and spend how much? $50,000? You're going to spend $10,000+ perhaps on a semester. Am I right or no?
Yeah. I think Southeastern was around. Man, it's been so long, and I'm honest. I didn't have no scholarships, and my mom paid for all my college. So there ain't no way I would have gotten that student loan debt, and I feel bad for all these kids that kind of get pushed down that pipeline. The system to go get in all this debt, to go work a job you hate, to pay taxes and die,
Right.
And it's like, there's other ways, what I'm saying? There's other ways.
They don't know any better, right? When you're young, as far as taking on big loans like that, unforgivable loans, who would take, as an adult, who would ever accept an unforgivable loan? A loan that you can't default out of,
Jeremy, the best way, because I think, I don't want to insult anybody. So the best way to think of it is like this. is we don't know what we don't know.
Right.
So when you're growing up, you're listening to people like my parents pushed me to go to college. My parents didn't go to college. What are y'all telling me to go do this for? On top of that, when I think back to my childhood, like every successful person in my life, like my dad's friends or my mom's friends or like the neighbor that were 6-figure plus or millionaires, none of them went to college. So this was pushed on us for different reasons, but basically to create a class of workers, of people
Right.
that pay taxes, keep the world going, work these jobs. And look, there's nothing wrong. It's a way to provide for your family, and that's an honorable thing. If you work a job and even if you live in paycheck to paycheck, you're not beneath anybody. You're an honorable person as long as you're doing, a legal job. You know what I'm saying? But there's just other ways. This is just alternative ways to break out of the rat race. Like, look, if you're happy, dude, I'm not happy doing adjusting. Like, that's why I don't do it full time. But if I had a job that made half the amount of money, if I had to choose between a job that made half the amount of money of adjusting, but I was happy, I loved the job, or a job, adjusting, making twice the amount of money, but I have to do that full time, I would take the happy. Being happy is everything, man.
Right. And we also spoke about this too. Just, you know, I I'm actively convincing people to be an adjuster. I have Adjuster University. I've got the online school, but at the same, and I'm very outspoken about this. I don't particularly love adjusting. It's I love being good at something, right? That's what really does it. I love achieving. I recently took a personality test and I scored high. I get my high off achievements, right? And I've achieved something with independent adjusting. But what I love most is the freedom that independent adjusting gives me financially. Um, it is the big as far as my skill set goes, it's the biggest bang for my buck. I get the most amount of return out of an hour's worth of work as an independent adjuster and I'm my own boss and all those other great perks. But what's great is that this field I'm able to extract enough money out of this field to begin building something with my future, to begin building that legacy that, entrepreneurs like you and I think about, that, and building generational wealth and all these great things and being able to buy the yacht and do all these things. You're not going to do that. I mean, I don't care how fucking great you are at being a claims adjuster, a freelance claims adjuster, but you're not going to get to that level. But what you are going to get is a excess amount of cash yearly. And then what you do with that money is completely up to you. My day-to-day overhead living where I am, I mean, I've got more, my lifestyle is a bit more expensive than I guess other people on my block, certainly other people in my family and friends of mine. But I don't need that much money to live off of day to day. But I still want to make 250, $300,000 doing independent adjusting because that extra is what I can really build something with. So you've been saying that you're part-time. So you've got and we went over this. You've got all these other things that you're doing other than independent adjusting. So you're kind of like you said, you're part-timing it. You're taking what you want out of independent adjusting. What have you historically done with some of that excess?
Well, I really expanded my digital jukebox company.
Jukeboxes in the bars that you pay
Yeah,
money?
like touch tunes. It's not a franchise, but I'm like an approved operator, so it's a great passive income. I've bought a lot of real estate, duplexes, rental properties. So, and I'll be honest, the last storm, man, what was the damn name of the storm that just hit Louisiana? Because I live in New Orleans. Oh yeah, I worked that, and dude, I'm being honest. You can look at my bank account. I took every dollar of that and I poured it into crypto. So it's like that. It's because think about it, man. You're all money is your labor stored, right?
Right.
So you put this time in, you make this money, that's your stored labor, and then I spread it into stuff like kind of like like planting seeds. You know what I'm saying?
Right.
Because I know what that could be, but yes, I worked that storm, and I probably won't work again. I'll just kind of next big one. I'll look at the numbers and see if I want to go put myself through 3 weeks of hell or,
What did you say before when we were talking about wealthy people and what the consistencies were that they have?
Well, like I said, I don't want to get this conclude that I'm or you either, because I think me and you were just average intelligent dudes. Something in us made us go getters. And when I look at wealthy people I know personally or wealthy people in society, they all have two things in common. They own real estate and they own stocks. You find me a millionaire. You find me a millionaire that doesn't have a part of his assets in either of those, or didn't make a sum of his wealth in either of those, then it doesn't exist, because of the way, and we could get into that inflation and, assets go up. The value of the dollar goes down. So you want to move your money. Think about it. The money in your bank account is going down, right?
Right.
Look around you. Cost of gas is going up. Cost of milk, bread,
Yeah.
everything goes up.
Yeah.
So that's why you look at real estate prices in the past year, how
Right.
much they've appreciated. So you want to get your money in assets, in real estate being one of the best asset classes to build generational wealth. It's just a fact,
Right. I I learned this from someone, and it's kind of interesting. And I do a very poor way of defending it, but I try to go broke every quarter. I don't see in my bank account. I mean, I make a pretty good amount of money, but I never really see in any single bank account more than like at a single time $40,000. Very rare do I get to 30,000, 20 here and there. But once that dollar amount gets high, man, it's just like you said, that what people don't get is that money sitting in your bank account. So you got a savings account and you think, okay, the smart thing to do is we put money in the savings account and we're going to build wealth that way. You're not going to build wealth that way. You're going to build a better portfolio for your bank. That's it. That money, every dollar that's in there is getting devalued every single day.
Yeah, a traditional bank savings account doesn't even keep up with inflation.
Not at
So
all.
if you're getting 0.04, it's a scam. It's a scam. And, the student loan debt, like we talked about that's a scam. And society has molded these younger generations to comply with and just accept that there's no other way. That no, don't go be an adjuster, don't go do that, don't
Too
go.
risky. Too
Yeah,
risky.
yeah, and look, and in some cases, hey man, what we're doing, it's not for everybody, and that kind of hits me sometimes when some of my friends who have gotten into it and I see how overwhelmed they are, and I'm like, man, just some people aren't built for this, and that's okay, because the more, the older I get and the more money I make, the less stress I can have in life, the better, man. You know what I'm saying? And look, I love hustling, I love grinding, I love, those feelings you get on a storm when you really bust that. Yeah, yeah. You know what I'm saying? You like, dude, I cannot believe I just did 100 claims. You know what I'm saying? Like, but the stress it puts you under, not everybody doesn't do well under stress, man.
Yeah. That's something I've since 2016, 17. That's been my MO is, I just kind of would kill myself with work, you know. And 2016 was my greatest year, and I didn't even go out on a storm. I was just doing daily claims, and I've never been able to top 2016. But I've never been on the, I've never been in the worst health I was ever in by the end of
You start eating
2016.
bad, you drinking,
Oh man,
it's a slippery slope, dude.
out on the road, yeah, eating garbage all day because next thing you know, we go from January to March, then you're in June, and you're like, yeah, well, I'm gonna next month I'm gonna get in the gym and we're gonna get rid of all this. Then it's November, and you're like, fuck my life, what happened to me? And my bank account looks great, but I look like shit, you know. But kind of doubling back, I also want to clarify when I was mentioning the lack of money in my bank account. It's once it gets up that high, man, that money you got to get at. If you follow me, you got to deploy. You got to get that money working for you. Whether it's just whether it's putting it in stocks, put it in something that, like you said, is greater than the inflation rate. Savings account ain't going to do shit for you. I don't care what Dave Ramsey or whoever the hell says. It's not doing shit for you. Don't even bother. Keep it in your checking account at that point. But find a place to put it to work. And great thing's real estate. You're absolutely right. Every wealthy person has got real estate. It don't matter. And it's appreciating and it's indestructible too. Once you get, I mean, crypto can go up, go down. We can go back and forth about the future of that. But crypto's only been around for so long, real estate's always been there. And it has its ups and downs too. But
and they're not making no more of it.
Yeah. And man, it is there to stay. And you could get a great deal doing real estate and in some ways not lose any money even after a down payment just because you got such a great deal and you're able to, you put 40 grand down. The poor person thinks, oh, then you lost 40 grand. Well, not really, because you're getting this income producing property and you're getting it for 40,000 less than market. So you already got $80,000 worth of equity in this house, and you just bought it at, people don't understand that.
And think about, let me add to what you said. Think about that. A 30-year mortgage, right? So with a 30-year mortgage, I can control, let's say a $300,000 house, right? A $300,000 duplex or rental property. And let's say I put 20% down. What's that? 60 grand, right? So yeah, the average person sees that as crazy. But think about this. So now I control a 300, 400,000, whatever it is, house. I control that asset with that down payment. Now, you don't need to always put 20%. There's so many programs to put down 3%. There's so many. And get with a good mortgage broker, a good real estate agent. They can break all of this down for you, right? You can't do that in anything else. I can't go buy $300,000 of Apple stock with 30 grand. No, I need $300,000. So it's a way you got to think of life not as money in a bank account, as net worth. What is your net worth now, right? And then you could the benefits of real estate. I could go on and on. Tax write-offs, property appreciation, principal pay down. My tenants pay my notes. And just like you talked about with adjusting, there was people, oh, don't get into this. It's a dying industry. It's the same thing with real estate, dude. Like it's the same thing. Oh, tenants are going to destroy your property or it's going to be empty and you'll have nobody to rent it. Dude, I'm gonna be honest with you. I got 5 rental properties. I've never gone a month without a tenant. And Jeremy, let's say I did. Let's say I had a property and the median rent was say $1,500 a month, right? And I was renting my property for $1,500 a month, and that property is vacant, right? And say my note is $1,200 a month on that property, and I can't find somebody to rent for $1,500, and the median house is $1,500. Let me ask you this: you think if I go down to $1,400, I'll get a tenant? $1,300, I'll get a tenant? $1,200, and I'll just break even? I'm gonna get a tenant? You're gonna get a tenant. You just gotta think of it different, Like, hey man, if I want to, I'll take a good tenant. I'll take, instead of $1,500 a month for an average tenant, if I have a great tenant that's going to be long term and they get it for $1,400 a month, I'll lose that $100 a month to have a good tenant, a long term tenant. Just so let them pay the note. They pay the note.
Right. And because that ultimately they're paying the note so you don't have to. And it's not like that money, because this was a thing that evaded me for a long time. It's not like that money is not necessarily going to you. Sure, you're paying, on an amortization schedule, you're paying most of your interest up front, right? So a lot of that money, a predominant portion of that payment is going towards interest, but you're also paying down the loan of the house. And later, a couple years down the line, you're going to sell that house. You have more equity in that house because even if the cash flow on that house is very little, you're still gaining more equity in it, while the value of that house, more likely than not, is also going up. And you can sell that, collect the difference, or you can take a loan out against that, refinance, keep the property, keep that tenant in, you keep the cash flow coming in. Now you're pulling some money out to put into another property, rinse and repeat, and people don't get that. But just like you said too, There are people in the real estate game that there are successful people in the real estate game will not tell you that you shouldn't get into the real estate game.
And again, it goes back to, you don't know what you don't know. So if any of this is eye opening to you, just understand that I didn't have a formal education in this, because our school systems do not teach these things. So like, don't ever feel beneath somebody. Just know that, hey, you have to be a student of this. So let me give you an example that's, I use this example a lot. I have a friend of mine. He's what we call around here a plant boy, right? He works at the plant. They make good money. It's and he's got a nice big house, right? And I'm gonna just make up numbers. Say his house note is $1,000 a month, right? He pays $2,000 a month, because these amortization of these 30-year mortgages, the interest is front loaded, right? So when you pay $1,000 extra, that's all principal. And he thinks he's a genius because he's going to pay his house off way sooner. So instead of paying $1,000 a month, he's paying an extra $1,000. When you pay that extra, it's all principal. It's no interest. He thinks he's a genius. And I blew his mind when I told him this. I said, listen, so you're right. You're paying all interest, but understand, where else can you get a $300,000 loan with less than 3% interest? So I said, Alan, the plant that he works in his retirement, I forgot what plant it is, but he has stock in that refinery. So say he's been doing that system for 4 years, right? So he knocked off all this money off his house. Nothing wrong with paying off your house early, but think about this. I said, Alan, instead of that $1,000 a month, you're paying 3% interest, or less than 3% interest. Instead of $1,000 a month paying extra on your house, what if you invested that money into your plant stock? And it hit him. And I'm like, so let's just say you're paying 3% on the house, but let's just say you're getting a 5% return. So now you're profiting 2%. The government is handing you, there's good debt and bad debt. So you're making money off of this debt. So when he thought, and look, don't get me wrong, right? He's a smart dude. He's going to have a paid off house. That is an accomplishment. That is great to say, you know what? If all else fails, I have a paid off house. But it's just a different way of looking at money. And when we looked at his retirement portfolio, the amount of stock he had and how much it's appreciated. And I said, Alan, so basically, 20 months, you could have added $20,000 to that. And that would be that changed his whole perspective, dude, and people, they don't teach this. They just don't teach this.
No. The common person doesn't even know what the average return on the S&P 500 is year in and year out. I mean, that's 8 to 10% right there. I mean, if you look at the last, if you look at the last 50 years, I don't have it in front of me, but if you're watching this or listening to this, really prove me wrong here. If you look at the last 50 years of the S&P 500 and average out the annual rate of return or annual growth, it's going to land, I would say, somewhere approximately 7.5%, might be even 8, somewhere north of there. So you're right. They don't teach this. If you think you're doing the right thing, and I hate to rag on Dave Ramsey again, but this is like Dave Ramsey thinking here. You think you're doing good because you're spending an extra $1,000 a month, right? And you're thinking that, all right, great. Well, instead of, I'm going to really be thankful of myself in 15 years when I don't have to spend another 15 years making this payment. Meanwhile, what you're not thinking of is, 3%. One of the lowest rates you could possibly get for a loan in general. 3%. I don't even know what you could get for less than 3% on a loan, but you've got 3%. You're saving next to nothing, but you can take that money and then put in the S&P. The top 100, you can have whatever opinions you want about stocks, that they're dangerous, that they're risky. Sure. Okay. But what about the risk of the top 100 companies in Standard & Poor's? They're going to continue to go up. If you believe the rich are going to keep getting richer, then you can believe that the S&P 500 is going to keep getting richer as well. It has. So take your money, $1,000 a month. How many people? And then ask your friends and family this: how many people do they know that are putting investing $1,000 every month on the first of every month into a large fund? $1,000, $12,000 throughout the entire year. Nobody's doing that. Nobody. If you tell if you're a blue collar working family, right? You're working at the plant and you're at, Thanksgiving with the whole family and you try to explain to them, "Oh, I invest $1,000 a month." You're probably the only person doing that because everybody else is just focused on saving 3%. You're looking for 8% growth. And in 15 years, and then compound that, you have no compounding effect. I mean, I guess you do have a compounding effect with paying off the extra $1,000. You're saving that 3%, but compound that 7.5, 8% that you're doing 12 every month for 12 months. Compound that over 15 years. I don't even know. You'd have to pull that up and see what you'd come out with. But
There's
whoo,
calculators that do that, and like you said, there's index funds that track the entire S&P 500. So like that, an index fund that tracks the entire S&P 500. That's literally the safest. Not financial advice. I think I got to say that. That's like the safest thing you can be in. So when we understand that, like again, we don't have formal education in this, and what society wants you to do is, rely on your 401k. Don't think about it. Well, let me tell you something. They're skimming off the top of those 401ks. Those retirements, there's so many middlemen making so much money. Now, granted, those things are safe as long as the country doesn't go to war or complete economic collapse, which crazy stuff's going on right now, but we won't get into that. But let's just think long term. And I remember I had a financial advisor years ago and I had a bunch of money with him and I'd go in there once a week. And he said exactly what you said. He had a chart of the S&P 500. Dude, I didn't realize they were doing this stuff like in like the 1920. I'm like, how the hell did they track stocks in 1920? It blew my mind. But he showed, hey, it goes down, it goes up, hits an all-time high, goes down, goes up, and all the market is a chart of human emotions, and humans are emotional creatures that they panic and bad news comes out. Like use the pandemic for example. Go look back at Tesla stock, Microsoft, Apple. Look at Netflix, Google, Amazon, some of the biggest companies in the world. Look at what you could have gotten those stocks for at rock bottom prices. You know why? Because people panic sold.
and I looked it up. So check this out. S&P 500 over the last from 1970 to 2020, the average annual return is 10.8%. So if you just go over, you can go do a Google search for compound interest calculator. And you could go to investor.gov and you could just put in the data points. But if you put in a $1,000 initial investment and you're going to make monthly contributions of $1,000 and you're going to do that every month and you're going to do that over the course of 15 years. And let's go 10%. Let's go under the statistically proven 10.3. Let's just do 10 to keep it easy. Okay? And you calculate that your annual rate. Now, you do some basic math, 1,000 times 12 times 15 is $180,000. So over the course of 15 years, you kept yourself from enjoying $180,000. But by the end of that, you're going to have just over $385,000 instead of that 180.
What you just described, that strategy is called dollar cost averaging.
Right, because you're doing $1,000 over. It doesn't matter what the market looks like. You're just putting it in there. And that's an important part too.
They did a study where they took three people, right? Let's say me, you, and some guy named Billy, right? And let's say, Jeremy, you're the smartest, you're a whiz kid. You picked the bottom and you had $12,000 and you put the whole 12,000 at the bottom. You're a genius, right? And let's say Billy said, yeah, you know what? I'm doing what you said, 1,000 every month for 12 months, right? And then say me, Classic Kev, I blew it this year. I bought at the top. I put the whole 12,000 in one shot at the greenest top of the market, right? You know who actually is going to perform best? Billy, that dollar cost averages because of the compounding interest effect. Time in the market, you can't time the market. But as long as you're consistently investing over the long term, you're going to see the best results.
Right.
But we're impatient.
Right. We're impatient and we're emotional. Just like you said, man, I lost, early when I was doing adjusting and, I was dumb. I never made the money. in any other venture. I've been in a bunch of different ventures, but I never made the money I did until I became an adjuster. So I think the first year I spent it all on worthless garbage. Right. I first full year, I think I made like 115,000. I had like one kid. I had no expenses, but
Wait, the kid was worthless garbage?
no. All I had was the expense from one kid, right? And that was it. I had like we had a 2-bedroom house. Like we had nothing. And by the start of that next year, man, I had zero. I had nothing. I spent it all on worthless garbage. So then
I've been broke many a times.
Yeah.
And rock bottom, that's gonna teach you lessons. That top of mountain,
Right.
never taught you. Like, oh man, I look, you want to learn a lesson, lose some money.
Right.
It's the fastest lesson you gonna learn.
Right. So that second year, man, I said, okay, stocks. I'm going to get into stocks, right? And the trickiest thing, if anybody's watching this, maybe you could speak on it. You get into this, right? Like you have a good chance of getting dumb luck if once you get into stocks, and you feel fucking good about it. If you take $1,000 and put it in the market, right? And you just you're like, oh, Tesla's going up, right? Throw it in Tesla, and then you come back the next day and you're like, oh, I'm at $1,100. I had a feeling about this. Like, I'm pretty good. And you start doing that and you're going up, right? And you feel like because you're looking at stocks, you're like, oh, this is on the rise, throw money there. This is on the rise, throw money there. And it's going up. Everything's going up. And all of a sudden, you didn't have to go to school. You didn't have to do any of this. You're just a natural stock picker, right? And then it tanks and it goes down, and you watch your little $1,000 turn into $7, and you panic and you sell. And congratulations, you ate a $300 loss. You thought you did well, but you lost. And I lost. I think the first year I was like trading stocks, like I was some sort of professional. I lost like 30,000. It was stomach cringing for me. But I did literally the opposite. I was a pro at the opposite strategy, the opposite, successful formula. I bought high and I sold low. I thought that's how
the opposite, Jeremy. You had it backwards.
I thought that was it. I picked only the stocks that were way inflated.
And Jeremy, I want you to think about this. There's a saying that everybody's a genius in a bull market, and we've seen that a lot. And if you look at my portfolio, I like to evaluate this to sports, right? Tom Brady, how many Super Bowls has Tom Brady lost? How many playoff games has Michael Jordan? How many playoff series has Michael Jordan lost? Michael Jordan lost like 6 playoff series in a row. So that 30 grand you lost, that's gone. But I want you to think about the lessons that really did teach you about not just the stock market, about the value of money, about how much hurt that had, and just understand that it's almost a form of psychological warfare, because understand there are, like you'll see it, especially in the stock market, you'll see it consistently. A company will come out with great news, earnings reports through the roof, and the stock price will go down the next day, because there are people at place that are trying to rob you of your investments. And what they'll do is they'll pump a stock up, they'll do what's called a rug pull, bottom it out, and then they'll shake out the Jeremys that say, oh, you know what this is? Let me just get out. And then they rebuy at a lower price and rinse and repeat. And it's funny you said Tesla, because Tesla is, a very volatile, a very manipulated stock that is, in my opinion, and look, I don't own it now, but I made a bunch of money on Tesla stock, but it's a very overpriced stock. So what you need to do is retrain your brain, right? And it's hard to do. Red is on sale, right? Red, and I don't care. Look, if you ever get FOMO, like that fear of missing out, like, oh man, I don't want to miss out.
Yeah,
if you ever have that feeling,
it's up 15.
Don't do it.
Right.
Just don't buy.
Yeah.
Because if you have that feeling, I promise you, learn from my experience that 9 times out of 10, it's gonna drop, and you could have got a lower price point. But let's talk about your situation, right? So, was it a stock in particular that you were down a lot on?
Oh no, I think it was a bunch. You know what it was? It was just I had a
Penny
habit.
stocks.
No, I wouldn't do penny stocks. But back in those days, I had a habit of, I would pick a stock that was going up. It's up 5-10% on the trading day. And I would say, oh, that's just going to continue to go up to 1 million. And I would get in on that. And then that would dip down next day. That's down 3%. And I'm like, oh, I got to get out of this. So I would sell. And then I would take what's left and then put that into another stock that was going up. And then the same thing would happen. And then I sell. I would have 5 losses to 1 win, you know, and it didn't, and it took me a while to realize as time would progress, I learned different trading strategies and, tried to just focus on one, I don't know if you're familiar with like the 1% strategy. I just try to go for 1% a day. That was it. Crypto, it's a little different, you don't have to do that. But for stocks, a good strategy is just 1% a day. It's a very little tiny thing, but that 1% a day compounding over the course of an entire year, if you're going to take this seriously, you'll go from small beginnings to big outcomes just with that. But no, back in those days, man, I had a bad habit of I was trading on emotion. I had so many emotional ties on the money that was behind me, and it took me a while just to overcome that and to look at money not as something without my well-being tied to it, where if I went down, I'm going to be like, oh no, this is my life, and that feeling of vomit, because you're watching your value go down. And another big thing that I come to learn is to learn to really to mathematically know when to cut your losses. Because if you go down, and once I actually saw these numbers in front of me, if you have a stock, right, and you've got, let's say, $1,000 tied into it, if that stock goes down 50%, and so you went from $1,000 to 500, you only went down 50%, but you're going to need that stock to double in value, 100% in value, just to get back to where you were before. That is twice as hard. I mean, it's more than twice as hard, really.
That is so. Let me show you how I look at this. Okay, so let's understand that anytime you buy a stock or a crypto or a real estate, any asset, I want you to always remember you need to research. Like let's use Apple stock, for example. We're going to use Apple stock because I think people understand that's a stable company. They're not going anywhere, right? I don't even know what Apple stock is right now. Let's say it's $100 a share, right? And let's say you're Jeremy, you put $1,000 in it at $100 a share, and it drops. Bad news comes out, iPhone blows up or something, and Apple stock drops 20%. Then something happens in the government, it drops, another 30%, 20%. So now your $1,000 is worth 500, right? This is how you got to think of it. Apple's a good stock. Apple's a good.
They're not going anywhere.
Put another 1,000 in. Now what you did, you lowered your cost basis. So your cost basis was, $100 a share, but then you just rebought in, right? It's kind of like if
now you're at 75, right?
Yep. So now you had to put more money in. That's why you never want to, if you got 25 grand, you never want to just throw 25 grand in on one shot.
Right. Even if you have 25 grand, you keep a cash, you have to still have a cash position. Yep. For the dips.
Yeah. Put 5 grand in once a month, and again, if you, and look, trust when I tell you, it don't matter how smart you are, don't matter what school you went to. If you don't know what you're investing in, you're more than likely going to sell when it dips, because it's just the way the brain's wired, man. It's psychological warfare. It's like the things I'm investing in, I can tell you who the CEO is. I look at their P&L statements. I know their assets. Sometimes I know these companies better than them because I'm a business owner. So like I know what it takes to be successful in business. So I call it the lie detector. I'm real good at, picking out, what's BS and what's not. And it's hard, bro. It's if you want to play safe, if you want to just like you said, buy an index fund, put it in your Roth IRA, contribute to it, whatever money you have to lose, and set it and forget it.
Yeah, dude. So, all right, let's get back. So how many pieces of property do you have right now?
I got 3 duplexes and 2 single-family houses.
Okay, 3 duplexes. Okay, all right. Is that what's the future? Are you so you did Ida. What are you leaning more towards now? Because I know you've got the YouTube channel, right? Which by the way, I mentioned this before. Dude, it's great to see somebody doing something like that. You
It's
know,
so fun,
from
man.
where we come from in
Yeah.
independent adjusting, getting out there and putting something together and just not putting, just like you were saying, just about diversifying, not diversifying your sources of income, man. Not being a guy that's like, hey, I'm an independent adjuster. This is all I do. This is all I'm banking on. You're putting that money into, you're putting that attention into different things that can create, an income for you. And part of that, man, start a YouTube channel talking about stuff that's on, the tip of everybody's tongue, which is crypto. What's like so what are you thinking for the future? Are you leaning more into crypto or real estate, or what's the move here for somebody that might have like 5 grand?
And let me when I say this, and again, like whenever I talk about these things, A, it's not financial advice. And B, like if any of this seems foreign or like I'm speaking Chinese, just understand that I own an ATM company. I own a credit card processing company. So I have a background. I'm able to see how these banks work on a back end, ACH deposits, the way we move money around. I know a lot about it, so this stuff really clicked for me. But Charles, want to tell you, I mean, dude, look at in the news just yesterday, the Staples Center where the Los Angeles Lakers play. Crypto.com just bought the naming rights of it. Like this is the future, y'all. It's going to this. You know, the early investors in this will be. I mean, Bitcoin's already made like so many millionaires. You could just look at the charts. You could have just got Bitcoin for what, $3,000 last year. It's like almost 60,000 right now. So, crypto will make some of the richest people in the world in the next 10 years, but it's going to be a bumpy ride there, dude. There's a lot of ups and downs, a lot of manipulation in these markets.
Right. So so where are you putting all your money then? You're splitting it up? Or
Yeah, so I'm not very diversified right now because I look at it like it's the gold rush, man. It's the new gold rush. So think about the gold rush back in, I don't know what year that was, when everybody was going to mine gold. And so there was a lot of people going to mine gold. Not that many people made money, but you know who made the money? The companies that sold the pickaxes and the shovels, right?
right, right.
So in stocks, I've invested in a bunch of mining companies that mine crypto, right? Because that's like the companies selling the pickaxes and the shovels. Also, I've invested in companies that make graphics cards and chips because there's a chip shortage right now. I don't know if you know that. There's a big chip shortage because these high powered computers to mine crypto,
Yeah.
you need NVIDIA graphics cards. So I'm invested in you know companies that make graphics cards like NVIDIA and AMD. I'm invested in mining companies. I got a video on my channel where I break down the 3 mining companies I'm in, and I also invest in crypto. So I'm not very diversified right now in stocks. I've literally taken profits from positions I was in, and I rolled it over into this,
Right.
and I'll make it in this, and then keep it moving, to the next thing.
Yeah. All right. So what's the top? I know you've got it's on the channel, man, but give me some love here. If you're new to crypto and you don't know what to do, I know you can download Robinhood and you get access to, I think, a couple different coins, right? And but if you're new to crypto, what would you recommend a person go to as far as like a platform goes?
I would look, if you have Robinhood or Webull, you can use those, but just understand that like you don't actually crypto is not a stock, y'all. It's an asset. So you have a set of private keys when you buy these that you could put offline and nobody can hack it. It's not even, it's on the blockchain. It's not even, on a computer network. So when you're buying off these exchanges, you don't really own the asset. You own a representation of it. So I wouldn't recommend, like, so I'm on Coinbase. That's one brokerage I use. I use a bunch though. So I would recommend Coinbase, Voyager, and if you're a little bit more advanced, KuCoin. That's going to give you access to a lot different, a lot riskier cryptos, but the riskier ones, that's where you make the 100Xs, but they could also go to zero. So I'd say if you're somebody new, Coinbase, and let me give you a little tip of what Coinbase can do for you. Coinbase has like little quizzes on it, right? Where you can take these quizzes and they will pay you in the crypto that you take. So they want to pay people to learn. Like think back in the day with AOL. AOL used to send out 1 month free trial.
Right.
They were giving you access because they wanted to get you to learn this new technology. So I'd say Coinbase, do the quizzes, get on there. I have referral links on my channel, and you get free Bitcoin if you sign up with my referral link. It costs you nothing. Like we both get free $10 of Bitcoin.
Yeah,
but,
check it out. Check it out. Yeah.
Yeah, I'd say Coinbase. I'd say Coinbase if you're new, just kind of learn it. And
What's all right, here's a common one that I always hear, man. Bitcoin or Ethereum? What do you do?
All right. So that's a good question. And I want you, people think of, the average person thinks of Ethereum. Oh, that's the cheaper Bitcoin.
Right.
They couldn't be more different. And the best example I could give is Bitcoin. Think of digital gold, like all the benefits of owning gold. It's a store of value, right?
Right.
Bitcoin is digital gold. Bitcoin has a finite supply, only 21 million. That's it.
Right.
21 million will be made. But wait, Jeremy, how many millionaires are in the world?
A lot. Yeah.
A lot more than 21 million. So there's not even enough. And this isn't just United States. It's a worldwide currency.
Right.
There's not enough for everybody to own one. What do you think is going to happen when people figure that out?
Right. Right.
So Bitcoin's digital gold. Ethereum is digital oil. Ethereum, the best comparison I get, digital oil or the internet. Ethereum is a layer one that is a smart contract platform, basically programmable money. So all these NFTs you're seeing in the news, these celebrities buying these, and Jake Paul and Mike Tyson and Steph Curry, that's all built on Ethereum. It's just a public ledger. Like use your house, for example, right? You own your house, right?
Right.
You can prove that. You can prove that. I can go to your house and take a picture and say it's my house. And if somebody didn't know me or you, that they're not going to know who to believe. But you can go to a title office or, your county or whatever and get the paperwork, right? So what Ethereum is just a ledger of data like that that's stored on a network that's not centralized. So there's no central point of failure, meaning that let's say that county record has your records for your house. If I go in there and hypothetically I hack that record and I say I own a house, well, now it's my word against yours. With Ethereum, we're creating a ledger that is worldwide. So but nobody has all the information, right? That's the key. So the information split amongst miners all around the world. Okay. It's we're creating a global economy.
Right. So let me ask you, so Bitcoin, right? Finite amount, 21 million, right? And they're not all mined, right? So, do you know how far into it are they?
Yeah. So as of now, I think like 18 of the 21 million have been mined. And dude, like the code, there's a thing called a white paper. It's like the blueprint, and the code, it's almost like, and again, they don't even know who made it. It's an alias, Satoshi Nakamoto, that they think made it, but the code is just like brilliant from because you created a completely deflationary asset that is stored on the most secure network in the world. Let's use Afghanistan, for example, right? You've seen the footage of the people having to flee Afghanistan because they're a war-torn country, right? What do you think happened to those people's bank accounts? So they had to go to another country. They're immigrants. Their money's gone. With Bitcoin, they take it with them. The government, it's a completely, there's no CEO, there's no president, there's nobody who owns it. It's the people's currency. It's the most secure network. So now what you said, so there's 21 million, 18 million have been mined, right? So there's only like 3 or 4 million, I think that's left to be mined, but it's going to take them 100 years to mine that. So think of the US dollar, right? Why? You have to ask yourself, why is the cost of housing going up? Why is the cost of milk going up? Because of inflation. It's the silent killer. They're printing money. When they add more money to the economy, it makes the value of the dollar go down. With Bitcoin, they can't make anymore. So the value can go up. It's deflationary. So there's nobody that can come in and say, oh, we need to print more Bitcoin. Not happening. So, and look around, look who's buying it. Look who's buying it. The Elon Musk, the Michael Saylor, the CEO of MicroStrategies, Tim Cook, Apple's CEO. He said he owns it. It's all the smart people are buying it. Hello, like people.
So correct my thinking here. So, all right, you brought up a good point about inflation and the government printing out money, right? So the value of the dollar obviously goes down as they print more dollars, right? And that gets distributed amongst the public. So when we think of Bitcoin, for the longest time here, they've been miners have been continuing to mine, and that continues to give more Bitcoin out, which ultimately would devalue the cost of Bitcoin. But the price is going up anyway because of so many more people entering the market. So if that's true, would it not also be true that now that the ability to mine is becoming significantly less, and it's going to take 100 years, you say, to get the remaining couple million out? Is it possible that despite all of the growth that Bitcoin has had over only the last like 5 years or so, despite all of that exponential growth, could we see in the next 5 years even more growth? Even though we've gone from, I think 5 years ago, it was less than $1,000, it was a couple $100 maybe to get into Bitcoin. Now it's like 60,000 or so. Is that going to be a blip? Is the 60,000 that we're at right now going to be a blip on the radar compared to what we may see 5 years from now?
So yeah, absolutely. I mean, you're going to see, with a deflationary asset, there's really no ceiling to how high it can go. That's why it's the people's money. It gives everybody a chance. So let me start with Cathie Woods. Cathie Woods is the CEO of ARK Invest. Cathie Woods is, Google her. She's like known as one of the best, brightest hedge fund managers. Her prediction is that you're going to have a $500,000 Bitcoin, I think, in like the next like 3 years, because more and more knowledge. I mean, you have entire countries adopting it. El Salvador made it legal currency. You have more countries adopting it. You have sports players wanting to be paid in Bitcoin because, Tom Brady came out and said he wants to be paid his salary in Bitcoin, Ethereum, and Solana. So people are realizing that the value of money is going down. Like use I think it's in not Argentina, Venezuela. They have what's called hyperinflation. So let's say you live in Venezuela, say you're the hardest working person in the world and you save up 100,000. Well, the currency is devaluing so much that your 100,000 can be worth 50,000. You can never get ahead. So this system is allowing everyone. And now what you said about the miners, well, dude, they're not just mining Bitcoin. The miners, Bitcoin is your bank, right? It's a store of value. The miners are validating transactions. So let's use an example. Let's say I want to send you $1,000 in Bitcoin, right? All right. So the normal system, right? If you go to a gas station and you swipe your card and you want to get, $50 of gas, a signal goes to a third. There's a bunch of third parties in between, right? And it goes, okay, Kevin, and eventually connects to your bank. Those systems cost a lot of money. Those are what's called the legacy systems. With Bitcoin, this is what happens. I send you $1,000. It's a network. It's all autonomous. It's all automatic. It's a network of miners solving complex computations to figure out that I sent you $1,000. So let's say there's 10 miners. The consensus of the network has to approve the transaction, right? If they approve the transaction that so let's say there's 10 miners and they're everywhere. So they can't collude together against us. One could be in Florida. One could be in Russia. One can be in Australia. They're all around the world speaking different languages. So if the miners, so let's say 9 of them say Kevin sent Jeremy $1,000 in Bitcoin. But one miner's nefarious. He's the bad guy and he's working with me. And he's saying, oh no, Kevin didn't send Jeremy 1,000. He only sent them $1. Well, guess what? The consensus of the network that's unbiased, that's uncontrolled, that doesn't know us, they agree that I sent you $1,000. They all get rewarded in Bitcoin, right? So you're taking away the human element of like, you can't hack the network. In order to hack the network, you would need a 51% consensus. So you'd have to take over 51% of the miners all around the world.
Right. It's just
So
unfeasible.
yeah, but even if you could do it, or you could just say, well, shit, instead of robbing people, and then if people are getting robbed and nobody's going to use the network, now I can just mine Bitcoin and I'll be a millionaire. You're removing the human element, and that's what these systems are doing. It's just a set of code. There's no owner. It's just a set of code that exists. If our government today said we need to ban Bitcoin, you can't. It just exists. As long as there's a node, whether it be in Argentina, Spain, Russia, or at my house, it exists.
Right.
It's never going away.
I think that growth, man, that is something that the growth behind Bitcoin is something that just cannot be overlooked. I mean, you said what did you say? 300, how much? $500,000 in a couple years
Yeah, I think
potentially?
Cathie, and then Google that. I don't, let me Google it real quick. I don't want to say something inaccurate, but I know she's predicted a $500,000 Bitcoin, and I could tell you unequivocally, I don't know when, but you'll definitely see $1 million Bitcoin. I mean, look at these CEOs; they're adding it to their balance sheets. They're buying it all up.
Right. Well, I'll tell you this. I made some money off Bitcoin some years ago, like 5 years, 4 or 5 years ago, during the first real big rush of it. I got in a little bit early, and I think when I got in, it was a couple thousand, I think maybe 5,000, something like that, and they were talking back then about this could potentially go up to $100,000. And I was thinking to myself, like, most people weren't saying that. Most people were not saying that. They were saying 50, 25, that would, and that by itself, if you talk about a stock like that, I mean, you're gonna get booed out the room because that's crazy. That is a crazy high prediction. To say $100,000, you're not even getting picked up by most blogs, or it's just outrageous. Why not 200? Why not 300? But as of right now, we're at the northern end of that. We're the price of Bitcoin in the course of that was 2017. I remember that because that's when I was out during Hurricane Irma when that happened. I stopped paying my estimated taxes. I started just dumping everything into Bitcoin, and it was going up, and it was fantastic, man. But yeah, back then it was certainly less than 10,000. I think it was somewhere to the tune of $5,000. Man, I could have let the amount of money that I had in there. I think by the time it was like 12, $15,000, I had 400. I had like $450,000 worth of Bitcoin sitting in there right now, and it took me like, over the last. It took me up until maybe a couple years ago to finally get over the fact that I fucked up that heavily.
Hey, that's why I brought up the example with Tom Brady and Michael Jordan. Like I said, Michael Jordan lost 6 playoff series, I think, in a row. But you don't remember him for that. You remember him for the six rings. You don't remember Tom Brady lost the Super Bowl to Nick Foles. You know what I'm saying?
Right.
Like
Yeah.
a backup quarterback. But you don't remember that. You remember, But I got the article here, and again, Cathie Woods, she was on CNBC, and she's the ARK Invest CEO. Expects Bitcoin to soar to 500,000 in 5 years, and she's known as one of the best hedge fund managers in the business. I think very high, and it's not just her. Kevin O'Leary, Mr. Wonderful, Mark Cuban, Tom Brady. You have some really, really smart people in this space, and but the best thing I compare it to is think of the dot-com bubble, right? We were a little young then, where basically investors, it was super FOMO. Anything, the internet was new, anything with .com in the name, people were buying and everything, and then it crashed, right? And I'm talking about that on my episode for my show today. But when during the .com bubble, when that all crashed, right? Do you know how much money Amazon was worth during the .com bubble and how much it was after? It's insane. I got it right here. So during the .com bubble, Amazon was $110. It fell to $11 during the .com bubble.
Oh my gosh. Yeah.
So understand the conviction you would have had to hold through that, right? But had you did hold through that, yeah, and there's an old saying, you make money when there's blood in the streets, right? You be fearful when others are greedy, and you be greedy when others are fearful. And my dad taught me that, dude, because when Hurricane Katrina ravaged the parish I'm in, The smart money was buying up all the rental properties for pennies on the dollar because everybody else was scared. Oh man, a hurricane. I don't know if it's going to come back. And those people are all rich. So understand that Bitcoin, just like any other financial market, it goes through cycles. It will crash and there's going to be another big crash. What goes up must come down. But you know what it's never done? It's never gone to zero.
It hasn't. No, it certainly hasn't.
It.
Man, so all right, so let's talk about the YouTube channel, man. So what do you got going on? So I know he has Kevin to stop and all, but nowadays known as Classic Kev, and you got the Classic Kev YouTube channel. So like, what do you talk about on there? Is it like coin picking and stuff like that, or?
Yeah, I do a lot of picks, and look, I'm very realistic, y'all. I do make a lot of predictions on the channel. Some come true, some don't. But I always try to give you the information and let you make your own decisions. So, and I start by anything I talk about, I'm investing in. Where some of these YouTubers, what they'll do is they'll go pump something they're not even in, because it gets views, right? It gets views. So anything I promote, I'm personally invested in. I'm very transparent. I show the portfolio on the channel. I'll show how much I'm down, show how much I'm up, show what I'm investing in. And I give a breakdown on why. And I say, look, it's not financial advice. You do you. You know what I'm saying? Like, dude, I got a bunch of misses. You know what I'm saying? Like, I got a bunch. Like, damn, one of my viewers told me to buy that. But the premise of the channel is, a lot of people wanted me to be crypto Kev because I know a lot about that space, but it's not. I'm classic Kev because I look at myself like a jack of all trades. I can come on here, I can talk adjusting with you. I've been successful at that. Come on here, I can talk about real estate. So I wanted to be classic Kev because anything that can make us money, anything, and look, nobody's dumb. I welcome anybody on my channel. If you listen to this, oh, this guy, man, this sounds like Chinese. Dude, don't think of it like that. You're smart. If you're watching this podcast, you're smart. If you're watching Jeremy, you're smart because he can show you how to make six figures. I can show you that, right? So the more people you can set in your circle, and that's what I want. So if you're somebody watching this and you're new, come watch my channel because you'll learn a little bit every day. I didn't know all of this overnight. They didn't teach me this in school. It was a daily grind, just like adjusting, dude. Just like, hey, man, you got to learn this. You got to be a student of the game. But now, on my channel, I've had big names come on my channel. I've gone on the largest crypto channels and debated, on the largest crypto channel, BitBoy Crypto on YouTube. I've had big name guests come on my channel. And again, y'all, it's not just about making money. It's about finding that financial freedom so that you can do good stuff in the world, right? Because let's be honest, it's hard to be charitable if you don't have money. Jeremy, you got a family. Your family is going to come first. But I firmly believe if you make a big bag in crypto, you got to be more generous. Dude, you doing this podcast, this is generous. I'm sure you've had people come up to you that told you they made $100,000 off adjusting because of you, right?
Absolutely. That's what drives it, man. That's the biggest motivating factor.
Thank you. And on my channel, that's what I'm like, look, I'm not selling you nothing. I'm not taking your money and trying to invest it. I'm not trying to twist your arm telling you to do this. I just want you to find what I found because I feel guilty if I don't. And like I said, you are a bartender. And luckily that one dude wasn't being snooty because we know a lot, in adjusting, a lot of these dudes can be snooty and like, oh, we don't want you in this industry. I think it's cool you're doing this because that feeling you got when those people make that money, bro. Like, I got friends, real shit, that come to me and they show me their portfolio and their portfolios are bigger than mine. And they look me in the eye and they tell me, dude, I wouldn't have got in this if it wasn't for you. And bro, it's like the best feeling in the world. You know what I'm saying? Yeah, it really is the best feeling in the world. And we're gonna do some big things, dude. We're all my community, we're all kind of investing in the same thing. So we go broke together or we get rich together,
Yeah, I believe that, man. All right, dude. So yeah, we'll wrap this thing up, man. Where can everybody, if somebody wants to learn more about crypto, they want to figure out, what your thoughts are, what your picks are, where could they find you?
YouTube.com/Classic Kev. So just search Classic Kev on there. And also, man, I got to give shout out to one of my good friends, BitBoy Crypto, because he taught me a lot. So I don't want to just plug my own stuff, because I really want, for mass adoption to happen, we have to all learn this. And, so BitBoy Crypto, that's the largest crypto channel. I've learned so much. It's really good for beginners. And again, this is new. Don't feel ashamed if you don't understand it. Don't feel ashamed if it sounds foreign. It's, at one time, Jeremy, we didn't have Twitter. We didn't know how to use Facebook.
Right.
Jeremy, at one time you didn't know how to use an iPhone.
Yeah. I just learned.
This new technology you had to get. It takes time to learn. So you just have to train your brain to just accept that you don't know something and that it's new. And that's it.
Accept that you don't know it, but be willing to ask the questions to figure it out. And that, as simple as that sounds, that is what I've learned is the big differentiator between the people that are just going to stay stuck, that are stuck and going to stay stuck versus the people that want to work on that legacy we talked about.
Every day, bro. It's every day. And look, dude, let me, I forgot to tell you this too. I went to an event in Vegas, a crypto meetup. And, dude, so my dad came with me who's, he's, this is new technology. I don't want to learn this. Dude, somebody like they, doing a Q&A and somebody stood up. It was a 70-year-old man. And he thanked the dude giving a thing because he's like, he watches his channel and he's like, man, dude, he's like, my portfolio's over $1 million. I've never invested in my life. I don't even know how to use YouTube. My kids, showed me your channel. I watch your channel every day. I just do what you did. I have a portfolio over $1 million. He's like, I just want to thank you because if I can do it, anybody can do it. And I just thought that was cool, man. It was an awesome message.
That's amazing. So guys, check it out. I'll put the links to BitBoy Crypto and of course Classic Kev YouTube channels with the description in this podcast. Kev, awesome to have you in, man. And put out some new stuff. Can't wait to be on your podcast.
Oh yeah, we're bringing you on because my audience, they've been asking about adjusting. So I'm like, you know what, guys, we're bringing the guy. I got a guy.
Let's do it. All right, brother. Till next time, man. Check out Classic Kev YouTube, BitBoy Crypto. Ask the questions that other people don't want to ask, and look into crypto, man. Look into crypto, diversify. Put some money into some real estate. And if you're just not making enough at your job to do any of that, either stay stuck or grow. Find something else.
Roger that.
All right, guys. Catch y'all on the next episode.